Welcome back to another video. It is 6:33 a.m. the 14th, Monday, September 2020. Sorry if you missed me on Saturday. You probably didn't because nobody really watches these, but that's okay. I didn't really see much in the news, so just took it easy over the weekend, but it's Monday and we've got some interesting Federal Reserve stuff happening this week. So let's check it out. Looking at the key market events this week, central banks are taking center stage with a raft of policy announcements due from around the world. The highlight will come from the Federal Reserve on Wednesday. They will also get decisions from the Bank of Japan and Bank of England, as well as a number of EM central banks. Meanwhile, as DB's Jim Reid writes, attention will remain on Brexit as the UK government's incendiary internal market bill is debated in the House of Commons this week. And in Japan, a new prime minister will be chosen following Shinzo Abe's resignation. Starting with the FOMC meeting on Wednesday, this is the first monetary policy decision since the virtual Jackson Hole Symposium, at which it was announced, this was a couple weeks ago, that the committee's longer-run goals and monetary policy strategy would be updated. In terms of the major changes, the Fed now seeks to achieve inflation that averages 2% over time instead of capped. So, in my opinion, you can at least deduce they're going to double the rate of inflation. This would allow inflation to overshoot the target following a period of undershooting. It also changed the wording around its maximum employment objective, now saying that policy will be informed by its assessments of the shortfalls of employment from its maximum level. According to Deutsche Bank, economists' release opened the door to adjustments in forward guidance and asset purchases at this meeting, though in a closed call they expect the Fed's forward guidance on interest rates to remain unchanged and for the committee to reframe their asset purchases as being focused on providing accommodation, not aiding market functioning. They're going to be buying more stuff. This meeting will also see the release of a new summary of economic projections, which will include the first 2023 dot plot. Meanwhile, in the UK, there are likely to be a number of headlines this week, most notably on Brexit. That follows an escalation in tensions between the UK and the EU last week after the UK government published their internal market bill, which seeks to override parts of the already signed withdrawal agreement with the EU. In response, the EU called on the UK to withdraw these measures from the draft bill by the end of the month and threatened to use legal remedies if the withdrawal agreement were violated. In terms of what happens next, today the bill will receive its first debate in the House of Commons. But that question will be how many Conservative MP rebel on the matter, with last night seeing the former Conservative Attorney General Geoffrey Cox publish an article in the Times saying that the bill would do unconscionable damage to the country's international reputation. Staying with the UK, attention will also be on the Bank of England on Thursday, who will be making their latest monetary policy decision. The base case per DB is that there won't be a further of 60 billion QE package until December, though there are risks of an earlier announcement at the November meeting. Keep an eye out in case there's a voting split between the MPC's 9 members, as some might seek additional stimulus. It's going to be a big week. Really hoping the UK moves forward and gets themselves out of the EU, which they voted on years ago. And real quick, turning to Japan this week, sees the election of a new prime minister following Shinzo Abe's decision to stand down for health reasons. In terms of the process, the ruling Liberal Democratic Party will gather today to elect a new party president, for which the chief cabinet secretary Yoshihide Suga is regarded as the front runner. Following the LDP's election, the Diet will then hold an extraordinary session on Wednesday to elect a new prime minister, with the new cabinet expected to be announced on the same day. You guys can read the rest, and the rest of this article is just kind of giving a day-by-day breakdown. I'm not going to read all that. So big news in Japan, big news in Europe, and big news here in America with the Federal Reserve talking again. Okay, and I think on that note, the central banks are printing apparently 1.4 billion an hour, and Bitcoiners are betting on the Federal Reserve capture, and this comes from CoinDesk. According to the Bank of America, 1.4 billion every hour, and that's the pace at which central banks around the world have been buying assets since the coronavirus-related lockdown started in March. Coincidentally or not, the market value of the Nasdaq 100 gauge of tech stocks has climbed at roughly the same pace since then. It's the kind of comparison one might expect from a Bitcoin true believer, steeped in the view that central bank money printing is debasing the US dollar, sure to bring rampant inflation. But it's almost jarring when the observations instead come from researchers at a Wall Street bank at the center of the traditional finance system and dollar-based economy. For much of the past 10 years, Wall Street has proved too big to fail, and monetary policy markets have implicitly supported asset prices to boost economic growth. Bank of America chief investment strategist Michael Hartnett wrote earlier this month, in a report. The 2020 policy is more explicitly engineering an overshoot in asset prices. That's the backdrop for the Federal Reserve's two-day closed-door meeting this week. Yep, that's what I'm saying. Where top U.S. officials will evaluate what is perhaps the loosest monetary policy stance in the central bank's 107-year history. Interest rates have already been cut close to zero, and the Federal Reserve is buying $80 billion worth of U.S. Treasuries a month to keep markets afloat, with trillions of dollars more available through emergency lending programs. This is fucking crazy. This is not good. They're meeting behind closed doors because we're in big trouble. The Fed isn't expected to announce any major changes other than perhaps formalizing a plan that Chair Jay Powell laid out last month, under which inflation would be allowed to rise above the 2% annual target without triggering immediate rate hikes. The central bank's balance sheet already has expanded this year by about $3 trillion to $7.1 trillion as of last week. Yeah. Wow. One possibility is that the Fed will hold off announcements of new stimulus until markets take a fresh nosedive. Despite the U.S. unemployment rate more than doubling this year to 8.4%, the Standard & Poor's 500 index of large U.S. stocks is still up 3.4% on the year, and speculation is growing that the Fed might be unwilling to let stocks fall. I mean, no shit, they're not. They're going to prop it up as much as they can. Quote, the market has become just too reliant on the Fed being there. Brian Colton, chief economist for the sovereign group at the bond rating firm Fitch. Okay. Yeah. Okay. Bitcoin watch. Let's skip down to the Bitcoin part of this news. Where is that at? Okay. Not really much here, except Bitcoin is down 75% from the record high of 20,000 reached in December 2017, and the market is pricing just a 5% probability of prices setting new lifetime highs by the year's end, even though some traders are buying call options at 36,000 and 32,000 strike prices expiring in December. Interesting. That's a gamble. We saw some out-of-the-ordinary activity in the 36,000 December call. Few buyers with most likely bullish expectations executed these trades. Yeah, man, talk about fucking crazy trading Bitcoin options and crypto options. Ugh, that's nuts. This article kind of sucked. Didn't really say what I thought it was going to say, I should say. I mean, I think the news that is pretty clear, and I don't know if you're seeing a theme. You know, if you happen to be one of the few people that watches these videos or listens to me talk about this almost every day, I mean, they are printing so much money. And whether you think, you know, we're going to go into hyperinflation like Venezuela or the Weimar Republic, or you think it's just going to come crashing down into a really bad deflationary period, it's not good either way. And yeah, I think precious metals and crypto is a better store of value than cash right now, and probably better than stocks too, tech stocks. And by the way, is this going to update this? I tried to find a cool heat map for tech stocks. The market is definitely open, and this isn't working, so next time. But if we take a look at gold prices, refresh that. I mean, silver is trading back in the $27 range again, and gold is the 1950 highs, high 1950s, doing good. I don't think these are going anywhere. I think these are going to keep going up as the value of the US dollar keeps going down. And then if we're looking at cryptocurrency, I did get a good 360 heat map at coin360.com. I just realized that, you know, these kinds of interactive maps are better for my eyes. It's easier to see what's up and what's down than the traditional list. But if you actually care and you prefer the list, tell me. I'd be curious. But BTC is doing pretty well right now. In fact, when I pulled this map up, I think it was only 10,500. I think it's just literally shot up. Ethereum is doing pretty well. Everything is just kind of going up right now, folks. XRP, wow. Other Ouroboros. This is an interesting little. You can look at all the Ethereum tokens in one map. That's interesting. That's interesting. Look at that. It's pretty, you know. But yeah, not sure which I prefer, to be honest. Anyway, it's going to be an interesting week, folks, with the news, especially coming from the Federal Reserve, and we will stay on top of it. And I should be here Monday through Friday.